Hello and welcome to Crypto Weeklies. In this video, we are going to discuss about AAVE. None of the content is financial advice. We'll be forecasting its price, regression-based fair value, and risk-based price targets. So let's get started. AAVE has been performing really well on its price actions in the last 30 days, up by about 65%. In the last 7 days, 7%, and also the last 24 hours about the same. 4.2 billion market cap, about more than 10% active volume at around 450 million, circulating supply about 15 million, out of which almost the entirety of the total supply is in circulation. So going forward, again, if we look at the price versus market cap analysis, again, essentially over the last 1 year or so, essentially one and the same chart. And that means anything that happens to market cap gets reflected pretty well in price. Again, there are no major unlocks for AAVE at this point in time. If we look at the price action, again, this is ETH chart. Again, if we look at AAVE USD, in terms of technical levels, it has broken out of the 20-week simple moving average and the 21-week exponential average at weekly level. Next level, again, coming close to that 0.382 fib retracement at around $280 from its 2021 peak to the 2022 bottom, roughly from the $670 AAVE that price action was at around May 2021 to the $43 in later half of 2022 at around June time period. If we look at some of the key levels going forward, if the prices were to break out to the upside, the $356 represents the next key target to the upside. The downside, first levels of support is that weekly averages at around 220, so 214 to $212. That's the 20-week moving and a 21-week exponential moving average. If that level is broken down, then that $192 is about some key area of interest where the price action did kind of hold as a resistance. Potentially in the next downturn it could hold as a support. If on the other hand the price action goes beyond that $356 target, the next target in terms of the Fibonacci levels is at around $430, roughly around $150 higher than the current price. So going to the machine learning based price forecast for AAVE, this model says that if there is a bull market in the next 6 months, the price could be somewhere between $310 to about $1,500. Whereas if there is a base case, that is, a market is not as bullish but goes to more so of sideways to slight bullish bias, then the price in terms of the directionality model could be between $260 and $350. In a downturn, in the next 6 months, if there is a downturn per this model, 125 to 220, that's the support in terms of the bear case for AAVE. Again, these models are using machine learning inputs and historical price action as data for creation of these forecasts. Again, the purpose is not to say if the market has to go up or down. The directionality case does help identify some trend behind the price action, that is if it's likely to go up or down. But again, this purpose is to identify if there was a bull case, what could be a theoretical ceiling, and if there was a bear case, what could be a theoretical floor or support. So those weekly targets are also available in tabular view on this website, cryptoweeklies.com, link on the bottom of your screen. You don't have to pay, sign up, or watch any ads on this level, on this platform. In terms of the regression based fair value, right now at 165, that's the fair value. Coming in at a major area of interest is at around $301. That's the 2 standard deviation residual applied to the fair value, where major peaks have occurred historically speaking. Again, if the prices were to break out from this level, there is another 3 standard deviation level where the prices could go to at around $405 without breaking the structure of the regression function. Again, if there is a continued bullishness, this is a non-linear model trying to incorporate the bearish and the bullish phases using polynomial regression. If the prices sustain a continued upturn, then the shape of the regression function could be in a upward bias than in the downward bias since January 2023. So to summarize, the price right now is above the fair value and the 1 standard deviation residual applied to the fair value, which is the next area of support in case of a downturn at around $223. The ceiling of key interest is at around $301, and the ultimately 3 standard deviation ceiling is at around $405. So that represents the discussion on the price. If the prices were to go to that, again, these are the price color coded with respect to risk levels for AAVE. Right now it's at around 83% risk, as the price has moved quite a bit away from the fair value for the polynomial regression analysis. Again, at this point in time, if the prices were to go to around $315, that would be represent a cool down in the market, again somewhere between 0.382 and the 0.5 fib level per this analysis. Again, we did make several videos related to AAVE when the price was much lower, again the latest being about 6 days ago, and also covered a lot through the bear market and the recovery year. So if you're interested, you can give us a like and subscribe to stay updated. The price has come close to the dotted red line, which is the 2 standard deviation residual. Again, this makes the current environment a key juncture in terms of the shape of the regression function. If it were to break out from this higher than this $380 level, then the shape could theoretically have an upward bias going forward. Now looking at the simple moving average based risk for AAVE, it's much lower than the regression risk. At around, this is 20-week simple moving average versus price, it's at around 40%. If it were to go to at around between 60 to 70%, the price for AAVE could be between $400 and about $430. That's the short-term peak in case of a continued bullish momentum. Again, this model did identify the April bottom when the risk was less than 10%. Again, you can check over here if the risk levels are well calibrated. Again, whenever they are less than 10%, this model does identify those days where the risk is less than 10%, the latest being in April, mid-April, early to mid-April of 2025. That's where, and the opposite is whenever the risks are higher than, let's say, 60 to 70%, anything above 50% essentially, that's kind of a topping pattern for AAVE. That is, for example, between $370 and at around $521. That is the intermediate peak forecasted by the SMA model. Again, goes forward 20 weeks and identifies what could theoretically be a peak. In terms of the time weighted average price model, though, this blue line represents the time weighted average price. Whenever the price is lower than this blue line, that's especially for quality assets accumulating below the time weighted average price, again tunes out some of the noise and also helps provide a range of accumulation where the hypothesis being in the next bull run, if that underlying asset does participate and the price eventually shoots up from the time weighted average price, DCAing below the time weighted average price, at least theoretically speaking, looking back, not the worst idea. So right now the time weighted average price for AAVE is at around $160. Now the price is well above the time weighted average price. In terms of the risk score on the time weighted average price for AAVE, it's currently coming in at around 53%. All in all, if we were to estimate a bull run target for AAVE with all of these individual risk-based model, estimated bull run target at a conservative level at around $431, representing about a 1.5x from the current price. $430 is quite confluent with the 0.618 fib level at around $430 on its fib levels, as well as on the risk-based target. And with that, I would like to conclude the video. Hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.